James, good evening to you, and thank you so much for joining in this late in the evening.
Yeah. Good morning.
The simple question is, one, could this have a contagion impact? And is it possible to predict that at this stage?
It's probably too early to predict that, but I think it's pretty unlikely because the heart of the crisis is really born in problems in Turkey. The problem is they're running very high inflation rates, and the indebtedness of the private sector has doubled over the last decade. So they're really in a bind. Higher interest rates aren't going to be the only solution here. So I think because the crisis is largely a result of domestic problems in Turkey, it's not likely to become a spread to a broader contagion.
Interesting. If this worsens, you still believe, James, that this will keep it restricted itself to Turkey and maybe a couple of other markets which would have trade and not necessarily spread across Europe or emerging markets? Forget this stage, if this were to worsen further.
I think that's probably right. I mean, there are other countries that have similar situations that the market sort of worries about, but I think because the financing problems of Turkey they depend so much on external financing, you can understand why this is becoming a currency crisis. But I think because the broad economy of the European region, the North American region is pretty strong, I think this is not likely to spread around the world. I think this is really pretty much confined to problems that have been festering really for a while in Turkey.
James, I think what adds fuel to fire is the standoff between the US and Turkey. And if Erdogan's speeches on Sunday are an indication he's not backing off, or at least not showing signs of backing off, do you think part of the tension would get diffused if over the next 7 days we see some bit of resolution happening between Turkey and the US?
You know, we don't think the tension between the US and Turkey is that much of a problem. And so for that reason, I think if there were some backing off, I doubt that we would see a resolution to the crisis. I mean, it might be some modest help, but I think the real problem is the underlying domestic situation is really creating a lot of the stress. So I have a feeling it's an easy target to focus on the tensions between the U.S. and Turkey, but I think that's really not the heart of the matter.
What is then?
I think the heart of the matter is really, Turkey is running very high inflation rates. The economy is quite heated.
Okay.
And the private sector is very dependent on the indebtedness of the private sector has really grown enormously over the last decade. And so Turkey is very dependent on the confidence of outside investors. And that's creating problems when outside investors have issues.
I get your point. James, I have one final question, and that's not really only related to Turkey, but markets at large. Indian markets have rallied quite a bit. We've seen a bunch of other markets, the large ones that matter, save for China, trading in or around highs. A lot of articles, a lot of opinion out there about how the markets are waiting for one key reason to have a bit of a steep correction. Almost all shallow corrections have been bought into very effectively in 2018. What are we looking at for the rest of the year? Could Turkey or some of the other reasons or other events like this be a reason that the market is looking out for? Or are you sanguine on the prospects of markets by and large for the rest of 2018?
I think we'd have to be more centered around some kind of major trade dispute. Honestly, I think that a lot of the trade tensions between China and the U.S., the market seems to be ignoring it. And I think the reason is because they sense that there's a lot of negotiating going on here, and both sides have equal leverage. So I think it's got to be something more surrounding the developed economies or China and the U.S. And I don't think that's likely because I think the U.S. economy is in pretty good shape, growing rapidly. The Chinese are doing a pretty good job managing their slowdown. So I think without a serious inflation, some kind of imbalance like an inflation threat, it's hard to believe that we're facing some major setback in the markets anytime soon.
Okay, my last question, James, as things stand, am I to assume that you are more bullish than bearish on market levels per se and market fundamentals for the rest of the year?
I'm pretty neutral, I think, in the sense the markets have come a long way, and we're already very close to all-time highs, and we don't really know how this trade tension is going to be resolving. And I think until that clears the air, and it's hard to believe it is anytime soon, it's hard to be strongly one way or the other. I don't see any reason to be negative on the markets, but I think the upside is somewhat limited now that we are at these high levels.
James, really appreciate you taking the time out and speaking to us at Bloomberg Quint India. Thanks so much.